Well, let's look at what the SA Reserve Bank may do. It may revise downward the growth forecast in its Monetary Policy Committee next. Certainly yesterday the discussion suggested that they might do that, and that came at the same time as demand for US factory goods rose in April. Private employers added 135,000 jobs in May. These are the stats that add to the picture that we have. And to look at these data locally and globally, Annabel Bishop, Group Economist at Investec. Annabel, it's a turbulent time at the moment, and these little numbers that come out, people perhaps oversensitive to them, optimistically and pessimistically.
I think they are. You know, we continue to hold our view that we're going to see the US economy lift in the second half of this year. We're already seeing an improvement now. Indeed, if it wasn't for the fiscal austerity of the sequester in the United States, we'd actually be seeing economic growth running a lot faster. So I think that is still likely to hold. And, you know, obviously you have seen it come through in the jobs data recently. And indeed, there's actually talk now of rolling back quantitative easing. And I think that you're starting to see coming through in the impact on US Treasury yields and even mortgage-backed finance yields. So all of that is really, I think, perhaps just talk coming from the Federal Reserve Bank at the moment, but certainly I think it's aimed at taking some of the froth out of the market.
Well, the point has been made, the word tapering, that's the new word. Tapering meaning winding down. I don't know, narrowing. What does tapering mean? Less of what was before. But if the tapering happens when it's clear that there's a surge towards economic growth, then it's good news, good news. If that recovery is still in doubt, then it's good news, bad news.
Yes, and I don't think the United States is going to do that. I think they are going to wait until they get some firmer footing in terms of the United States data. As you said earlier, the data does tend to be patchy. You tend to get a few good readings, and then you tend to get a poor one. And I think really in the second half of this year, we're going to see the US economy pull stronger, and that's when I think you'll probably get increased talk of some tapering in the quantitative easing. So it doesn't mean that they're going to raise interest rates in the United States, and that's really important. It just means they're going to ease off on the quantitative easing. And I think those are two different topics, but I think that the US Treasuries and indeed mortgage-backed finance as well is starting to factor in the possibility that eventually might get higher rates.
Easing off easing.
Yes, easing off easing. But the concern is the last time they met, they actually flagged the possibility of actually would go either way. We could actually raise the quantitative, or we could lose it, and that reduce it. And that was interesting. Now, what concerns me is the tepid nature of the recovery, which you'd say, okay, we're in a recovery phase, but just given the sheer scale of what's been done, we should be talking about a red-hot, roaring, out-of-control, berserk economy, and yet it isn't. Right? And that's the concern I have, is that this is an economy on life support still, and the life support is sort of gaining something, but it's certainly not something to actually discharge that patient yet.
Yes, and I think certainly in the second quarter of this year, you always were going to see some shakiness in the US economy because of the sequester, because of the cutbacks in fiscal spending and the impact on civil servants. But certainly, you know, there's one thing, there's a difference between actually doing something and changing, you know, making a change in quantitative easing or monetary policy, and just talking about it.
Yes.
And I think, you know, talking about it is still a tool. If they feel that the markets are getting a bit frothy, then perhaps you start to talk about it and make noises so things start to slow down a bit. They've done that in some of the other countries as well. Doesn't necessarily mean you're going to actually take your foot off the pedal, but it just means, I think, that you want to take some of the perhaps ebullience out of the market.
So Annabel, does this mean that what we're seeing in the US yield curve, the shift upwards, is going to be sustained, and we won't see the 30-year coming back below 2%?
No, I don't think so. I think, you know, if there are data point readings that come out that are poor in the US, and they'll stop talking, as they have been, about taking their foot off the pedal, and then you'll start to see a bit of a subsidence. It's only when I think you start to see a firm lift, and we believe in the second half of this year, so not in the second quarter, and really, you know, possibly toward the end of the third quarter, then I think you're going to start to see perhaps a more focused a more focused topic on easing, on quantitative easing. But I think at the moment it's really uncertain whether the US economy is still it's actually on the path to full recovery. I'm not convinced yet that it's actually strong enough to start looking to ease.
Do you think we'll see that tick of full recovery coming through next year's second, third quarter?
Yes, I certainly expect to see. I expect to see a move towards trend growth next year, and that's, I think, what you're going to start to see.
There we have a caller from Sandton, Joe from Sandton on the line. A question for the panel, or a comment for the panel. Joe, good evening to you.
Good evening. My question is, I keep hearing everybody talking about the sequester as if it was this significant cut in government spending, when I believe what it really is a cut in the future growth rate of spending.
Yes.
So there were no real cuts because the United States government continues to employ more and more people. So I'm hearing it, like I say, as it was a cut. It's not a cut. It's a cut in the future growth.
Yeah, my
comment?
sense is certainly the same. And although there were small cuts in expenditure, it certainly wasn't anything to say derail a robust recovery. My concern is that we're not seeing the kind of recovery that we should get with $85 billion a month. So the question is, where's we're expecting a second half recovery? What if we don't?
Well, what if you don't? Then you fall into the down case. I think that's the reality. You know, as the caller was saying, this sequester runs right out, you know, until 2020, 2021 or 2, I think it does. And so it is obviously a cut in the growth rate. But nevertheless, if you don't see a recovery in the global economy, then we obviously move into the down case. And I think already South Africa is looking at the down case with our currency so substantially weak. You know, the concern really is that our economic growth has fallen off quite dramatically. And the rating agencies have said that if that happens, we could be in line for a downgrade. So I think, you know, that down case scenario for us in South Africa would also include one of the global economy not starting to move back towards trend, obviously led by the United States. So if the United States trips in
let's
the
go locally. And we had that growth number, we had business confidence. It's as if the economy and people who run the economy and perceive the economy are saying, we're not happy. We don't like what we're seeing. We need a signal. We need a signal as to where this country and this economy is going.
I think we do have a sentiment issue at the moment. You know, the reality of the problem is that foreign investors view continual labour disruptions very poorly, as they obviously should, because they're a disruption to production. And if you disrupt production, then obviously you're producing less. And
but other countries also have labour disruptions.
They do have labour disruptions, but I think, you know, ours are quite prolonged. And the reality for South Africa is, you know, they've really escalated in the last 12 months. They've become increasingly violent. And I think the concern really is so much that this is going to continue in the future. We're obviously in an election year. We're going to run up to an election.
We're always in an election year, either for the ANC leadership or the national election.
We're now in a run-up for the election for the country. And I think the ANC probably is cautious about alienating its alliance partners, the COSATU and obviously the South African Communist Party. And they obviously are being cautious, and the markets would like to hear something much firmer on the labour issues.
I think this was the point with President Zuma's speech last week. If you read that speech, it's one of his best. It actually said all the right things.
Yeah, exactly.
But it's what he didn't say.
It's not only... He's in front of investors. He's actually very good. He says, you know exactly what you'd say. But back in the South Africa, there's a mixed message. People are saying all sorts of different things to that, and certainly, your investors are listening to Jacob Zuma and they're listening to someone else, and it just doesn't tie up.
But Ashraf, maybe it's not what people are saying; it's what in the end the government does. So people are looking for deeds, not words.
Well, they're looking at deeds, and I think Marikana is still fresh in everyone's minds, and people always refer back to that. If you read the foreign press, there's always a reference to Marikana when they discuss labour issues. Yeah. So I think that we almost have to get past the Marikana issue and treat these labour issues as we did 2 years ago, because we did have negotiations. It was aggressive. People did toy for a day or two, but then we moved on.
Yeah, but remember also in South Africa, if companies get to the point where they start to obviously lose such a significant amount of productivity that financially they become impacted and look to shift workers and obviously close marginal mines, then they can get their mining licenses rescinded. And I think that does differentiate us from other countries.
Yeah, you've got that problem where you've got an intrusion into the boardroom a little bit. The concern that and it's just something recent, because I've been relatively optimistic on South Africa in the sense that we've got an emerging market conditions, we've got growth, we've got yield, we've got a solvent government, which is a hell of a lot better than Europe. But then you just see everything pointing down, and then we say, where's the growth going to come from? Right?
Well, let's ask Annabel to answer that.
It must come from the global economy. We've got to have the global economy returning to trend. And, hear me out for the expected case. I mean, our expected case only has a 45% probability at the moment, but nevertheless. Yes. And, if the global economy does pull stronger, clearly it will pull our export demand stronger and the South African economy stronger. Remember also, consumers are deleveraging in the unsecured space, and that will put them in a firmer position toward the end of the year. But it doesn't mean that we're going to escape weak growth this year. We can't have anything else but weak growth.
Well, and the Reserve Bank is almost bound to be at the upper optimistic level of what growth will be, and they are now talking about revising down, Ashraf.
They are talking about revising down, but then their numbers were fairly optimistic to start with. So I think that downward revision, we'll get another downward revision in the third quarter, and that should be the end of it.
Yes, but there is one point to remember about the first quarter, is that most of the subdued growth, the dampening effect to growth did come from the manufacturing sector. It slowed down very sharply, and remember that the main cause of the contraction in the manufacturing sector for 2 months was a fire at ArcelorMittal at their Vanderbijl Park area. So if you take out that reduction in steel production for those 2 months, you actually get a fairly flat outcome. So there's going to be a rebound in the second quarter from this.
That fire, perhaps, they didn't talk much about it, and perhaps its effect was underestimated.